Hey, what's up, guys? It's Larry, the mortgage guy, your mortgage insider. And the purpose of this video is to explain to you why Credit Karma sucks and what you should do about it. I want to tell you what most lenders are thinking and know whenever they hear the phrase Credit Karma, but they're too afraid to tell you in your face. Quick disclaimer, I'm not trying to piss anyone off. You should be pissed off if you've been operating with bad information, especially when it comes to your credit scores. If you were tricked by Credit Karma into thinking that you had a higher credit score than you really did. Credit Karma basically tricked you into thinking that you're more qualified than you really are, and it sucks that someone like myself has to give you the bad news, because then you'll end up being mad at me when in reality you should be mad at Credit Karma. But I'm trying to educate the general public on the truth of credit scores and Credit Karma and help people make better, more educated, more intelligent decisions. Because it really upsets me when someone tells me what the Credit Karma score is, I pull their credit and it's lower, and they're mad at me. They're pissed at me. They're blaming me, or they hold me responsible for lowering their credit scores. But in fact, the truth of the matter is they were operating with bad information. They were tricked. They were lied to, and their scores were not exactly what they thought it was. When in reality, they were just operating with bad information, and they should blame who's actually responsible, which is Credit Karma, for feeding you bad information. But of course, I'm the one that gets blamed. Sorry, but not sorry. Let me start off by telling you, as a lender, that 99% of the time when someone tells me their Credit Karma scores, it is always different from what I see when I pull their mortgage application credit report. And the credit scores that I pull counts because I'm the one approving you and giving you the money to buy a house, not Credit Karma, technically. And that should be enough, and you can go ahead and turn off this video. But don't take my word for it. Let me show you how you can do the research on your own, so you know that I'm not just bullshitting you, and you can even see for yourself the information I'm providing you. And I'll actually provide you the links and the research that I'm doing in the comments and descriptions below. So the first thing I want you to do is open up your browser and search, is Credit Karma fake? And you'll actually get a few links. Some of them might be ads or whatever. And I want you to click, why is my Credit Karma score different from my FICO score? And it says it right here, VantageScore and FICO are two big rivals in the credit rating business. Credit Karma uses VantageScore. Their models differ slightly in the weight they place on various factors in your spending and borrowing history. Okay, now you have to understand, VantageScore and FICO are two totally different scoring models. And as it says on this page, they're the two rivals. Okay, so wait, there's two competing models of credit score reporting, FICO versus VantageScores. Why? History lesson. Okay, I want you to search FICO. Okay, everyone knows FICO, right? I want you to search FICO. Okay, and you'll of course get a couple links. Let's go and click the first one, which is my FICO. This is going to be the actual official consumer facing division of FICO. And actually, I want you to go to how it works and go to about the company, right? About us. Okay, and I want you to read this, right? My FICO is a consumer division of Fair Isaac, the company that invented the FICO credit risk score that lenders use. Starting in the 1960s, Fair Isaac sparked a revolution of pioneering credit risk scoring for the financial service industry. Blah, 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 right? All right, so right here, my FICO is a consumer division of FICO. Since its introduction over 25 years ago, FICO scores have been the global standard for measuring credit risk in banking, mortgage, credit card, auto, and retail industries. 90 of the top 100 largest U.S. financial institutions use FICO scores to make consumer credit decisions. Okay, so basically, FICO is the OG of credit scores, okay, which is probably why most lenders still use them, okay? They are literally the first company to translate all your credit history into a single 3-digit number that predicts how likely you are to not pay your bills. The number helps lenders decide how much of a credit risk you are, anywhere between 300 to 850. Okay, so what's the takeaway? FICO sells this information to Experian, TransUnion, Equifax. Okay, again, history. I want you to search fair and accurate credit transactions act of 2003. Okay, all right, here we go. Check this out. The act amending the Fair Credit Reporting Act adds provisions designed to improve the accuracy of consumers' credit-related reports. It gives consumers the right to see one free credit report a year from the credit reporting agencies, the bureaus, right? And the consumers may also purchase for a reasonable fee a credit score along with information about how the credit score is being calculated. Okay, so you have to understand, The big three bureaus, Experian, TransUnion, and Equifax, were forced by Congress and enforced by the Federal Trade Commission and Consumer Financial Protection Bureau, or FTC and CFPB for short, to provide raw data / credit scores once a year for free using a website of some sort. The one that they created was annualcreditreport.com, which is actually endorsed and worked concurrently with FTC and the CFPB. It's the only federally authorized free credit report and is not Credit Karma. Okay. But also on the page you saw, the Federal Trade Commission, it said for a reasonable fee, they can provide a credit score. ... Okay. So basically, if you were reporting this information to a lender or creditor, the same information had to be available to the consumer, is basically what they're saying. Creditors send it to the bureaus, so they have to send it to you. Okay. This did not make the bureaus very happy because, of course, they're using this information to literally make money, right? And they wanted you to pay to get this information. Okay. Or not you. I mean, it would be you, or it might be the lenders, whoever, but someone's paying for this information. Okay. They, of course, did provide the ability to get your credit scores for once a year, but they also took that one little addition where they are allowed to, consumers may also purchase for a reasonable fee a credit score, right? So they decided to take advantage of that. So the big three, they created a trade association to make money off of providing the information. Thus, the VantageScore was born, using a totally different system than FICO. Obviously, FICO wouldn't tell them how they do it since they provide the scores to the big three. And in reality, it's direct competition, right? So Vantage is created to compete against FICO, even though FICO is the most accepted, most used. At that point, it was the only used system. Vantage is designed to compete against it. But of course, the big three bureaus still use FICO, okay, which is kind of weird. It's kind of odd, right? I wouldn't say that they're lying about their scores, but they're definitely withholding information. Let's put it this way: the raw data becomes an abbreviated credit score with a fake score or a curated score, right? There's no disclaimer on any of these pages saying that no lender is going to use this information to qualify. So basically, they don't tell you, hey, I'm giving you a credit score, but no lender is going to use this information. They don't tell you that, okay? And you have to understand that 90%, again, 90% or more of the industry uses FICO and less than 10% uses Vantage, okay? So although they own the VantageScore system, like I said, the irony is that they all compete against each other as well. So some lenders report to all three bureaus, some only report to one bureau. So all the scores end up being different. Did you know that there's 20 types of FICO credit scores? So what I want you to do is I want you to go to your browser again and search different FICO credit score types. Okay, and then you click images, and then you'll see like a chart that's like a list of the different types of credit scores right here. Okay, check it out. You got Experian, Equifax, and TransUnion, and then of course their own personal FICOs or specific FICOs. You got FICO Score 8, FICO Score 8, FICO Score 8 for Experian, Equifax, and TransUnion, and then you got like FICO Auto Score 2, FICO Auto Score 5, FICO Auto Score 4. Again, depending on what bureau you're talking about, but basically, if you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 18, 19, 20 to 1, 2. There's 22 right here on this chart alone. Okay. So even FICO has a whole bunch of scores. So you have to know which scores to look for. If you zone in right here, used for mortgage applications is FICO 2, 5, and 4. So for Experian, it's FICO Score 2. For Equifax, it's FICO Score 5. And for TransUnion, it's FICO Score 4. Okay. And actually, I can give you like the specific names for it. Okay. For FICO Score 2, it's based on Experian data. So it's known as Experian / Fair Isaac Risk Model version 2. Okay. For FICO Score 4, it's based on TransUnion data. It's also called TransUnion FICO Risk Score 04. And FICO Score 5, based on Equifax data, it's also called Equifax Beacon 5.0. Okay. But these are the ones that you want to look at. For Experian, it's Score 2. For Equifax, it's Score 5. And for TransUnion, it's Score 4. Okay. Used for mortgage applications. So nothing else. There's no Vantage score here. There's no like Credit Karma. There's no, I mean, even these FICOs don't qualify for what the mortgage application would be. Okay. So I want you to keep that in mind. Okay. All right. So this is something that I need you to understand. 90% of lenders use FICO and 100% of mortgage lenders use this FICO. 100% of mortgage lenders use FICO. Let me say that again. 100% of mortgage lenders use FICO. not Vantage, which is what Credit Karma uses. So why are you using Credit Karma? It's almost like using a map for Florida when I'm in Texas. It doesn't make sense. Okay, the map is not designed to navigate the area that you're trying to be in. Okay, there's consumer credit information, there's marketing credit information, or marketing credit score, educational credit score. Look at those up, Google those. You'll see that it's really confusing. So my job or my goal for this video is to stop the confusion. There's only a few ways that you can check for the mortgage score. Okay, ask yourself, why is Credit Karma free? How do they make money? 90% of lenders are checking your FICO scores, not your VantageScore. And this is from Credit Karma itself. Let me go to look at the Credit Karma. Okay, I want you to browse and Google VantageScore and FICO ranges. We're going to actually read straight from Credit Karma's website what they say about this. Okay, so scroll down, you actually see there's a couple of them, but there's one that says Credit Karma. It says VantageScore versus FICO. What's the difference? Credit Karma, right? Because I mean, this is the reason we're having this video. We don't understand why my Credit Karma score is not what the lender sees, right? So check this out. If you scroll down, you'll see it says VantageScore and FICO ranges. It'll say both credit scoring models have evolved over the years, resulting in multiple versions of each. FICO generates two types of scores, base and industry-specific scores. FICO-based scores help predict the consumer's ability to repay a debt based on the overall credit profile, and they range from 300 to 850. Industry-specific scores help predict a consumer's ability to repay a specific type of debt, such as an auto loan or mortgage, and they range from 250 to 900. Not in the case of a mortgage, it's actually 850, but of course, they're talking about auto loans here as well. Okay, but right here it says, unlike FICO, the VantageScore model doesn't generate industry-specific scores. It only calculates base scores. Okay, again, unlike FICO, the VantageScore model doesn't generate industry-specific scores. That is the key takeaway and this is straight from Credit Karma's website. Okay, VantageScore does not give you the information you need to know where you stand when it comes to buying a house using a mortgage. Okay, FICO does, just so you understand. Okay. So the bottom line is 90% of all lenders use FICO instead of Vantage to qualify you for a loan. In my perspective, this makes Credit Karma completely useless since it uses a Vantage score when it comes to knowing if you qualify for a mortgage based on your credit scores. So how do I know my real credit scores? Okay, there's only 3 ways to do it, okay? Number 1, annualcreditreport.com that is approved and endorsed by the FTC and CFPB, and you can get your credit report once a year, depending on the situation. So if you go to annualcreditreport.com, okay, you will see that it's authorized by federal law, right? And it's pretty simple, right? You just click here, then of course you provide information. But you have to understand that this was the result of 2003's mandate, where Congress forced the bureaus, the big 3, to provide consumers access to their credit report at least once a year for free. Okay, number 2, myfico.com. Okay, again, we went to myfico.com earlier, right? And I show you the chart, if you remember, right? There's, for mortgage applications, there's FICO score 2, score 5, and score 4. Or more specifically, Experian/Fair Isaac Risk Model version 2, TransUnion FICO Risk Score 04, and Equifax Beacon 5.0. Okay, so you go to myfico.com and you can actually get those scores. Okay, so you just got to sign up, and then whenever you look at the scores, they'll actually show you like a chart, and you can actually see which ones are your FICO score 2, FICO score 4, and FICO score 5. And it'll be very specific. It'll actually say mortgage score or a mortgage credit report, right? And the last way to find out where your credit scores are is to talk to a lender like myself and have us pull it. Again, it's our credit report that counts because we're the ones qualifying you to see if we're going to give you money to go buy a house. Okay, not Credit Karma or anything else that's online. Okay, it's the lender. Talk to a lender like me because we're the ones who ultimately decides based on the credit report that we pull, which is the real one, whether or not I can qualify you to give you money to buy a house, aka a mortgage. But fair warning, the CFPB says there's only one true way to know your true credit scores when qualifying for a mortgage. If you could go back to your browser and you can search differences between consumer and creditor purchased credit scores. So what I'm saying is that I'm going to tell you, or I'm going to show you what they're saying the differences between a consumer, meaning soft pull, right? Something that you go online and you pay for or whatever, whether it's annualcreditreport.com or whether it's creditkarma.com or fico.com or myfico, whatever, doesn't matter. It's consumer purchase, meaning soft pull, and then creditor purchase, meaning hard pull. Okay. So once you search that, you'll see consumer financial .gov. They are the governing body that regulates the mortgage industry. So let's go and look at what their report says. Okay, analysis of difference between consumer and credit purchase credit scores. Okay, and then gives like a little summary, but read the actual study. You click here, and it says analysis of the differences between consumer and creditor purchase credit scores. Check this out. If you scroll down to the executive summary, because I don't want you to read the whole thing, you can if you want, but look at what the bottom line really says. Consumers cannot know ahead of time whether the scores they purchase will closely track or vary moderately or significantly from the scores sold to creditors. Thus, consumers should not rely on credit scores they purchase exclusively as a guide to how creditors will view their credit quality. Let me read that again. Consumers cannot know ahead of time whether the scores they purchase will closely track or vary moderately or significantly from a score sold to creditors, like me. Thus, consumers should not rely on credit scores they purchase exclusively as a guide to how creditors will view their credit quality. So literally the CFPB, the Consumer Financial Protection Bureau, the people who govern and regulate the mortgage industry is telling you the only way that you're going to know what your true credit scores are is to talk to a lender like myself. Okay. Basically, you cannot know your true credit scores without having a lender like myself do a credit inquiry to receive your mortgage credit scores. Translation, you cannot know your scores without a hard pull or hard inquiry. Sorry, but not sorry. So what's the key takeaway for this video? Number one, Credit Karma sucks. Okay. Number two, there's ways to potentially know what your credit scores are, other than Vantage, which is what Credit Karma uses. But the third and final takeaway is the only way to really know where your credit scores are is to talk to a lender like myself and have us do a creditor purchased hard inquiry credit pull. Okay. The main reason why I made this video is because I had a client tell me that my credit pull costed them 50 points, meaning they went from a 650 or whatever to a 600 because of my credit inquiry, which is not the case. Number one, it only costs anywhere between 1 to 5 points to do a credit inquiry, depending on how good your credit is. So 5 points maximum, guys. And number two, they had bad information. They were lied to and thought that their score was 650. And when I pulled it and it was 600, they're like, oh, well, I lost the 50 points. Well, no, that's not what happened at all. So yeah, it frustrated me, and that's why I made this video. Hopefully it makes a lot of sense. If you have any questions, you can always call, text me, email me, whatever you like. You can comment below. You can sign up for my home buying class. I'll have a lot more content information about credit and how it works and how you should use it and how to handle it, how to manage it, how to learn from it, how to get yourself in the best situation, how to improve your scores, and also how to set yourself up to get the best qualification possible when buying a house. Hopefully now you know why Credit Karma sucks. I really appreciate you guys watching. This is Larry, the mortgage guy, your mortgage insider. I'm out.